Chapter 7, Accounting Information Systems. Subsidiary ledgers keep track of individual balances. Two common subsidiary ledgers are the accounts receivable that contains the individual customer's activity and the accounts payable subsidiary ledger that contains the details of the company's creditors. The total of the individual subsidiary ledger balances must equal the balance in the general ledger control account, as will be demonstrated in the next slide. On the right-hand side of the slide is the accounts receivable control account in the general ledger. The balance of accounts receivable at January 31 is $4,000. This balance should be supported by the balances of the individual customers. On the left-hand side is the subsidiary ledger that contains the individual customer's information. This company has 3 customers in the subsidiary ledger, totaling the ending balances of Aaron Company of $2,000 plus Brandon Inc. of $0 plus Karen Company of $2,000 equals $4,000. This total of $4,000 does match and support the accounts receivable ending balance of $4,000. There are 4 special journals that contain similar types of transactions. The sales journal records sales made on account. The cash receipts journal contains all transactions that increase cash. The purchases journal records purchases of inventory made on account. The cash payments journal contains all journal entries that include a decrease in cash. All other types of transactions are recorded in the general journal. Correcting, adjusting, and closing entries are recorded into the general journal. The sales journal contains sales made on account. Therefore, the journal entry for each transaction would be debit accounts receivable and credit sales account. Remembering back to Chapter 5, the second journal entry is debit cost of goods sold and credit the inventory account. Postings are made daily to the subsidiary ledger accounts that contain the individual customers. Posting totals from the sales journal is made at the end of the month. The total sales amount of $90,230 is posted as a debit to accounts receivable, account number 112, and a credit to sales account, account number 401. The cost of the merchandise, $62,190, is posted as a debit to cost of goods sold and a credit to the inventory account. The cash receipts journal includes all journal entries that include an increase or debit to cash. Cash increases for many reasons. On May 1, there is an increase to cash as a result from an investment from the owner. The journal entry would be a debit to cash and an increase or credit to the owner's capital, account number 301. Other transactions included in the cash receipts are collection from customers on account within the discount period, sales made for cash, and a cash borrowing with the notes payable recorded as the liability. Examples of all of these types of transactions have been covered in previous chapters. In this chapter, the new concept is the introduction of the special journals. The posting of the cash receipts journal is similar to the posting covered for the sales journal. The purchases journal contains purchases of inventory made on account. Postings are made daily to the subsidiary ledger and at month end for the totals to the general ledger. The fourth special journal is the cash payments journal. All cash payments result in decreases or credits to cash. If the debit accounts in the transaction do not have a column dedicated to them, such as the transactions May 1 through May 8th, the amounts will be entered in the Other Accounts debit column, and the appropriate account numbers entered into the reference column. The transactions May 10 through May 28 reflect payments made to suppliers within the discount period. Once again, the procedures for posting are similar for other journals. Chapter 8,